Okay. All right. So we've had, as many of you would realize by now, if you've looked at any chart or if you've read anything out anywhere, we've had a very, very, very dramatic week in the world of currencies. And not only that, it's something that's happened which is pretty much going to affect pretty much most markets globally. Okay, so let's talk about it. Let's see the impacts. Let's see what's happened. Let's see how it will affect us. Okay, basically, for those of you who don't know, last Thursday, the Swiss central bank decided to, I guess, the terminology that they've used is they decided to unpeg themselves from the euro. Now, what they were trying to do, and they have been doing for the last 3 years, they had a policy where they were trying to sustain the level of their currency against the euro. Okay, so they wanted to keep it, I guess, at a weaker level, and every time that the euro was moving, they would intervene to basically keep it at that level. Now, the recent decline in the euro, when I mean recent, I'm talking about the last, say, 6 to 12 months, has constantly been putting pressure on the Swiss franc, and specifically on the Swiss franc central bank to maintain that policy, which many say was a stubborn policy to have. The opinions are mixed and vary upon different analysts, but the bottom line is that they finally made a decision, and bear in mind that this was not a scheduled thing. They just came out of the blue unexpectedly, and in many ways, I don't even think that they've discussed it with other central bank authorities or anything like that. They've come out on their own and they've decided that enough is enough, and they were going to untie and stop trying to keep that locked in rate. Consequently, what it did, okay, if anybody looked at a Euro Swiss chart, believe me, there is no spike in your chart. Consequently, what happened was in a period of 13 minutes, that's right, 13 minutes, the Euro Swiss dropped 4,000 pips. That's about 30, I think it's just over 30% of its value. It went from 120 to 82 or something along that nature. Now, I've been trading for a long time. In the last 15 years that I've been watching, I have never seen such a move in such a short period of time. The worst that I'd seen previously, I've seen the euro yen drop like about 700 pips in about an hour. That was when Japan and the earthquakes happened, things of that nature. But a move of this magnitude, I have not seen in one hit. Now, was it foreseeable? Some say yes, some say no, but I tell you, it did catch out most professional traders, hedge funds, banks, and so forth. So much so that I know of at least 3 brokering firms that have had to close their doors because the exposure that they received on that one single currency pretty much used up their free capital, and they can no longer, that basically a lot of the regulating bodies require that brokering firms have a certain amount of capital free for such events, and for those particular companies it's used it up. FXEM, which is a major broker as well, got caught up. That they were lucky that someone came in and bailed them out, and they got an injection of funds. Otherwise, they too would be in breach of not enough capital. As far as I understand, everything where we're at is all okay. So, and it's business as usual, which is a great sign. Okay, but what I'm trying to say is that the move was it's affected banks, hedge funds, everything. Let's talk about this before I go on that. I will. The biggest impact is the euro, obviously. So when we look at the euro charts, we will address the issue. Okay. So we will talk about that. If you have questions, I know they're going to come up. Just type them in. It's going to take me a while to get through them. I will get through them. Okay. So and we'll do our class as per normal. Okay. So I will address each individual issue relative to the currency as I move from chart to chart. Before we do that, as always, as you would have noticed, this is the schedule for this week. Australian Eastern Standard Daylight Time. So that's my local Sydney time. It's a big news in news. The biggest thing that's going to come out this week is going to be the QE decision on Thursday. Okay. Now, I don't actually think it's listed here. I don't think it happens in there. It will come out, usually comes out randomly at some point during the day. It's because basically what happens is a whole bunch of policymakers gather in a room, they have a nice luncheon, and they have a big discussion, and it may take an hour, it may take 15 minutes, it may take 4 hours. When they finish, they come out and they give a press release. Okay, so it's usually unscheduled, but it is for Thursday. Okay, Thursday is the time that this is due to happen. Bear in mind it's in Europe, so it's more than likely going to occur in our time anywhere between 7 p.m. to 1 a.m. Okay, so keep an eye on it. It is a big decision. It is the primary reason that the Swiss bank intervened. Okay, if you look at it between the lines, basically what most analysts are saying and what most people are thinking is that the Swiss bank maybe has been given a tip-off from Mr. Draghi that they are in fact going to implement some kind of quantitative easing program, which would basically mean that the euro would drop in value, which would make it extremely much harder for the Swiss to maintain that 120 level that it was trying to maintain. So rather than keep pumping resources into this to try to keep the level to that 120, basically the Swiss bank decided to say no, enough's enough. They let go, and many are basically of the belief that the fact that they decided to take that decision is an indicator in itself that they are going to implement some kind of quantitative easing program. Now, before everybody goes out there and starts to sell euros, just hang on. By the end of the session, you'll have a much clearer idea as to a direction, fundamentally, technically, what's possible, what's not possible. Okay, so just bear with me, all right? But it is now on the cards. It appears that it's a much higher probability that yes, they will implement a program, but you never know. Okay, so keep it for this particular week, purely because of this. The Euro USD, anything Euro, anything that we look at that's got the Euro in it is the one to look out for. There's plenty of news everywhere. If you're a GBP trader, this one's important for you because this is the one that makes a decision whether they're going to start to look at incrementing interest rates, etc. So that's probably the one for you. Okay, big packed week. If you have questions, type them in. Let's get started. Karen's asking me, is there a list somewhere? No, nobody wants to publicize a list, Karen. It's you just have to you hear it. If you're affected, you know about it. Most companies don't want to publicize that kind of information. I believe you're in New Zealand, Karen. There is a New Zealand broker that went down. I think they're called XL Markets. XL Markets in New Zealand. Okay, so you're from New Zealand, right, Karen? Is that one? Have I got you mistaken for a different Karen? So anyway, let me get my charts up and let's get started. Super funds, Roy, are they going to be affected? Okay, yes, but not the same way as currencies. Let's think about this before I get started. So let's talk about this a little bit fundamentally. Let me get a nice white piece of chart. Wait 1 second. Let me just work on this page. Okay, so what's happened? in order for the Swiss bank to do what they did, okay, basically their currency's just gone very, very strong right now. And what they actually did was they implemented a negative interest rate. So they've gone to minus 75 basis points. So what that basically means is if you were to put money in a Swiss bank, instead of receiving interest from the bank is actually charging you interest to put your money in with them. So immediately when this happened, a lot of money fled the Swiss bank. A lot of it went to the Aussie. So the big beneficiaries of this were the Aussie, Australian dollar, and the Kiwi dollar. Okay, so the New Zealand dollar, the NZD. Because why? These two currencies are one of the two major currencies that are still paying a high interest rate. So a lot of investors have a choice of either they put their money with a Swiss bank and pay the bank to hold their money, or they take their money and they move it across to an Australian bank or a Kiwi bank where the banks pay them for the privilege. Okay, so what does this basically mean? What it does mean, a lot of money starts to shift around. Okay, it starts to shift around from different asset classes, and it also affects equities. So to answer your question, Roy, is it going to affect super funds? It will. Certain sectors of equities will be affected. And when we start to talk about the euro, I'll talk a little bit about it more. But I'm just trying to give you a macro picture of what's basically taking place. Okay. All right. Let me change and let's get on with it. Let's start off with the Aussie dollar. Okay. Aussie dollar, Aussie dollar. Last week we said Aussie dollar looks to me like it's going to start to range in there somewhere. I drew a box and it's been staying inside the boundaries. It actually got up there, came back, went up, and we're kind of in there somewhere right now. There's two trades that I kind of like. All right, number one, I don't know if we placed this trade last week or not, but the 85 sell, if we get there, if I do a fib extension and then push out to my 61.8, it falls on the 85 level. Okay, so if anybody's interested in that one, it's an 85 sell. Did we have this trade last week, guys, or not? Can someone just remind me? I don't have it on. I might be logged into a different account. I don't know, but I can't find it. Can someone confirm for me if we had an 85 sell last week? No? No one knows? Okay, maybe we didn't have it. Alright, so if we didn't have it, I'm going to place it right now. So this is one. I like this one. Okay, so, and mainly because I get the feeling that it could bounce around in this big box. Okay, so it could do a lot of this. So there, 85 seems okay. Now, the market's quite volatile, so I'm going to give it a bit more room to breathe. I'm going to place an 85 sell. Here we go. And I'm going to go for a 0.1 volume. Size yourself accordingly, guys, if you're going to take this trade. And if for those of you who are doing the challenge, make sure that your risk is consistent. I'm going to put a stop at 85.30. So I'm risking $30 on this trade. Or actually, because of the strength, I'm actually risking a bit more. I'm risking about probably 38. All right, and I'm going to go for 80. I'm going to go for 84.60. Okay. And there it is. First trade. What we're trying to do, the market is here. We want the market to go up to 85. When we get there, I want to sell it back to 84.60, stop at 85.30, and I'm counting that the fib level and the round number combination holds for me and that the trade pays off. Any questions on that one? Is that one pretty clear to everybody? It's one of our bread and butter straightforward trades. We all good on this one? Yep. Great. Okay. So that's the first one. I have another trade as well. It's a little bit more aggressive. It's a price action trade. Let's for a moment, let me just get rid of the fib levels and let me get rid of this box so that we can all see it a little bit better. And let me shrink the chart. If you were looking at this chart, okay, we can clearly see that we're in a downtrend and we could have an opportunity to sell at the peak at the peak of a downtrend. Okay, so does everybody understand the trade that I'm going to be looking for right now? So we're a daily chart, we're in a downtrend, swinging down, and we're looking to maybe see if we can get an entry over here. Now, when I zoom in a little bit, the trade becomes much clearer. What have I got? What have I got over here? I'm looking at the candle with the fractal. So this one here, okay. And if I look at these two candles, what do we have? We have inside candles. Thank you, Alex. Great. So that means that we could get a trade if we break here, right there. If we, that's supposed to be a straight line. So if this current candle breaks through there, that's it. You are in a trade straight away. Okay. So Lois, do we need anything else? No, we've got everything we like. We've got the fractal. So these two is the setup that I'm looking for. That is the setup. The final part of the equation is I need to break there. If this current candle breaks up there, then you've got to cancel out your trade. So if this goes up this way, well then it's no trade, no harm done, end of story. Okay. However, if we get there, that's it. We break down and we're triggered. The question is, do we not have to have a fractal at some point of resistance? Well, this is it. We got the fractal. That's the fractal right there. If you go back and you review part 2 of the price action class that we did a couple of months back, you will see that part 1 we talked about, or I think it's part 1 actually, that I said finding the price action inside of a trend. We're in a trend, okay, and on the pullback right there, that's where it is. Bang, there's the trade. Okay, so this setup is in the correct spot. Okay, so it's actually ideal. So we got two options here. All right, who likes this trade? Who doesn't like it? Who's feeling a little bit cautious? Yes, Lois, they can be in channels and all those. We haven't seen one in a trend for a little while. That's all. We've been working a lot with the channels and things of that nature. But this one meets the criteria. Okay. So if we all like it, I'll call it out. What have we got? The entry's going to be at, let's make it 81.65. Okay, I need to use my mini terminal on this one because I need to manage my risk better. Give me 1 second. I want to get in at 81.65. My stop's going to be 135. My target, let's make it 1 for 1. Okay, because it does get towards the bottom here. So here we go. Sell stop. 81.65. Fixed cash. I'm going to risk $50 on this trade. My stop is going to be 135 pips, we said, and my target's going to be 135 pips. Double check. All good. We're happy with that, and let's place it. Okay, the order is in the market. Now, if this candle gets bigger than that, you've got to come back and cancel the trade out. Okay? So don't forget. What we want to happen is get triggered into the trade and go all the way down here. The only little bit of concern here is that I may want to move my target just a little bit higher. If I do though, my risk to reward becomes less than 1 to 1. The alternative is, if we do break here, there's a good chance we can go much lower. So it's a tough one. I'm going to leave it as it is. I will manage this trade through Twitter, through my account, and what I like to do, especially in a volatile market like right now, if my trade triggers and I get to about halfway of my target, at the very least I'll move my stop to break even. So at least that way I'll either make nothing or I'll get the entire amount from the trade. Alright, so we've placed 2 trades on the Aussie dollar. We've got the pullback up here, or we got the continuation down here. Do these 2 trades make sense to everybody? Does anybody have any questions on these 2 trades? They are different. They're 2 pending orders. We're all good? Okay, I'll move on then. Euro USD. Alright, here we go. First of all, last week on a daily chart, we had what was looking like here could have been a good setup to go long, but we said let's wait, step into a 4-hour chart, and let's wait for some confirmation. We did. 4-hour chart. We were over, I don't remember, we were over here somewhere in this area here, and we didn't break. We got to this area here. We kind of had a little bit of a break, but it came straight back down. It actually gave us an opportunity to trade down. Difficult trade to catch, so I don't expect anybody, did anybody get this? I wouldn't expect you to. This was a little bit tricky, but what it did mean was that it stopped us from going into the trade long based on the daily chart. So that was the main thing. Where we are right now, we're kind of here. I'm a little bit reluctant to go this direction right now. Let's talk about the euro. Let's see what's going to happen, and let's see how we can possibly position ourselves. Now, the first thing that we all need to know is Thursday, the QE program. Okay, very important. See, because the Swiss bank did what it did on Thursday, okay, what this basically means is everybody's thinking that the ECB will definitely go ahead with the QE program, because otherwise why would the Swiss bank cause so much chaos to the markets if they didn't have any inside information? That's the belief. If that is the case, many analysts believe that some kind of stimulus has already been factored into the market. So if you were to go out right now and start to sell euros, it's already factored into the market. So there's a couple of key levels that we need to look for to basically get our trade off the mark. Most people are of the opinion, when I say people, I'm talking about analysts in the industry, are of the opinion that that yes, they will do a QE program, and it will basically be in the order of around about $500 billion over 18 months. This is what they believe may take into effect. So what I'm basically saying is $500 billion means that they will go out and buy $500 billion worth of bonds, okay, into the market over the next 18 months. Now, what's the impact of going out and buying bonds? What that basically means is that they are going to flood the market with all these extra euros. The bottom line is they're printing money. Okay, so if they're printing money, the value of the euro naturally goes down. However, if they come up and on Thursday they say, yes, this is what we're going to do, most people already think this. This has more than likely been factored into the current price. So if this is what they announce, we could see the euro go up. Now, this seems like, wait a minute, they're going to print more money, but the value goes up. This sounds silly. I know it sounds silly, but already the move that took place on Thursday and Friday, okay, has largely been factored into the market. All right. So if they say, yes, we are going to do it, and the deal is, it looks something similar to this, we could see a little movement upwards. If they announce that it's going to be $1 trillion, for example, this is a number that's getting thrown around. If it's 1 trillion, this will shock the market. This will cause a big move down. We could see 110. Last week I said to you, we may touch 115. We touched 115. Okay? If they announce that it's going to be 1 trillion, or if it's a number bigger than the 500, it will shock the market and cause it to go down. The last option is if they say no to QE, so basically they say no, we're not going to do anything, the market will definitely go up strong. We could go all the way back up to like something like 120. All right, if they say that they are not going to do anything. Do those three scenarios make sense to everybody? It's got nothing to do with the chart. It's purely on the fundamentals and the psychology of what's happened in the market and how people are basically positioning themselves. So what you need to look for when the announcement comes up, if you want to try and make this into a trading opportunity, what you have to do is you have to very quickly find out what that number is. Okay? If it's a number bigger than 500, there's a strong chance that it could drop down. Okay? If it's a number smaller than this, or no QE, then you look for a trade in the opposite direction. Okay? So this is very important. This is why sometimes when they do something and it goes the opposite way and people say, well, why did that happen? Okay, now if you're going to be trading euro this week, another thing to look out for, there's a high chance that it'll go down up until Thursday, and just before Thursday you may start to see it come back up. The reason for this, if you see this, it's because all the people that were short are starting to get nervous before the decision. So what they are doing is they are taking their profits out from the market. When they take their profits out of the market, they start to drive the price back up. Okay, so the euro this week is a very difficult one to trade. All right, so based on technicals, I'm not going to trade on technicals because the fundamentals will outweigh anything that we talk about technically for the euro this week. All right, so all I have for you right now is the information that I just shared with you. Now let's think about one other thing. How will a weakness in the euro affect other markets? Now, if all of a sudden there's all this injection of euros into the market, so basically who gets that money? All right, that money goes back out to us, to everybody. So where does that money get spent? A lot of it gets reinvested. Now, people in Europe right now don't have many good things to invest their money in. And this is one of the reasons that the euro's in trouble. So what naturally happens is those extra euros get converted to a stronger currency and they get invested into different things. So for example, a major beneficiary of this movement will be the US dollar. All right, because a lot of these euros that go out into the community, let's call it that, they will then transform themselves into USDs and go into stocks, shares, US bonds, and things of that nature. So the Euro USD will have a double fold effect. The Euro weakens and the US gets stronger at double the rate. We could, if we get a big number, we could see parity on the Euro USD. All right, if the number comes in big, we could see parity. It's not going to be in a week, but it could be in the next 2-3 months. Okay, that is a big move that I've just said, but that's the way that all the cards are lining up. If the first one falls, the other one will trickle across. The first one already did fall. That was a Swiss bank. They're starting to line up. We just got to see what this number is. Does that make sense for everybody? Yep. Okay. All right. I know that some of you are having some sounds dropouts. I think I'm just getting a bit of an unlucky connection at the moment. I am recording it, so in the recording straight off my computer, so it will be perfect sound quality wise. Okay, you can catch anything that I may have missed. All right. In summary, Euro USD this week very volatile. Keep a look at the magic number that we want to look for is 500 billion. Okay, and whether we have QE yes or QE no. All right, so those are the things that we're looking at. As soon as you know these numbers, you'll be in a good position to position your trades in. Okay, we'll carry on. GBP USD. All right, GBP USD, very frustrating trade. We entered a trade last week, had the trade up to, I think it got up as high as about 130 pips. I saw it at about 100. I sent out a Twitter message. I didn't close none of the trade out. I moved my stop to break even, only to get stopped out down here on Friday. Very disappointed. I really wanted this one to push for me. So I didn't make any money. I didn't lose any money. Okay, so if any of you took this trade and you closed out some of it at the top there, well, at least you made some, and then hopefully you didn't lose any. Okay, I think my entry was 51.35. We went in with a pending order, so that's how what happened on the GBP for us. Now this week, what have we got? The big one this week for the GBP is the announcement, the vote announcement, whether they're going to more than likely start increasing the rates, or whether they're happy with the way it's currently going. That will have some impact. I believe that was on, let me check, when was it? Here, this one. Oops, I'm in yellow. This one here. So that's Wednesday, 8:30. That's probably the biggest news. That 8:30, well, actually, that big segment right there for the GBP. So look out for that. Other than that, with the GBP for this week, I couldn't really find anything. I'm looking. there was this price action trade, but I feel I kind of missed it. This one here, if I'm in a downtrend, there, basically to shoot in, you're very close to the entry price if anybody wants it. The only thing is I'm too close to the channel, so I'm reluctant to trade it, so no, let's say no. The only thing I can think of is let's wait and see here. Can we get a chance again to trade it? Or if you still feel confident on this level here, then you can trade it again. Still from current levels right now, which is 51.36, which is virtually the price that I got in at last week. Okay. At the moment, I don't really have anything for the GBP. I want to be here or here before I make a decision, so I'm going to have to wait it out. Okay, so that's what I got. I will call it when I see it, but at the moment, we don't have anything. All right, let's have a look. Next one, gold. Finally, it happened. All right, now this is interesting because I did have a few of you email me about gold, and I was a little bit reluctant to send out a message which basically displays to you my hesitation in the trade as well. Remember, we were indecisive whether we were going to be moving our line or not. In the end, the line is at the perfect spot right there. You only know that from hindsight. This candle was the first indicator that yes, we're ready. And then for those of you who emailed me about this trade, I did email you back and I said, okay, we got the candle. Let's bite the bullet and let's get in at the break of that high, at the break of this high over there. Okay, so that was what we said. I know that at least one of you took this because you sent me over your 20 trade challenge and this trade was in there. So the entry would have been about there. Some of you may have got a better entry, I don't know, but we've got the confirmation definitely now. So now if you're not in it, it is too late. So it's now you just got to wait and see what happens. So essentially the trade, if I shrink down, the way that we measure this is like this. The way that I like to do it, I go to the first touch, the second touch, and just inside the second touch in here, I measure out my distance. And then I go over here, and it's the same distance. This distance, I put it over there, and that's my target. Okay, so Phil is asking, how did the CHF move have an impact with this? Absolutely, it did. Basically, the impact was that a lot of currency moved. Okay, basically what happened was when the Swiss franc money, because it was paying negative interest, a lot of the money moved over to Aussie dollar and to Kiwi dollar. All right, and the commodity markets, they kind of relate to each other, and amongst everything, one, there was movement to the Aussie dollar through there, but also then the panic, uncertain markets, a lot of money moved to the metals because of whenever there's panic, the metals is considered to be a safe haven. There's only a finite amount of gold available on this earth. We can't print more gold like we can money. So whenever there's volatility, the commodities usually are a beneficiary of the volatility. The market panics, the money moves to the metals. Gold is the number one of the metals that usually gets this benefit. And it's funny that this move was caused fundamentally by something that happened in the market, but still it doesn't matter. It was that fundamental move was still reflected in our technical analysis of this chart. Okay, so in the beginning when I first started trading, I often thought, oh yeah, well this movement only happened because the Swiss bank did whatever. If the Swiss bank didn't do that, then this pattern wouldn't have come up. And I was of that opinion, but then I just found that it just happened too many times. Okay, so I just let that go and I trust my patterns. Sometimes you're wrong, absolutely, but you'll be surprised at how many times these patterns hold out. And in the time that you guys have been with me, how many of these patterns have we sussed out and have come really good for us? Okay, so here's another one. If you're in this trade, you're about halfway towards your journey. I would recommend right now take some profit or move your stop to break even. It is a volatile market, and hang on and let's see if we can make the other half of the journey. Now, who's in this trade? Who took this trade? Can I just get a show of hands? No? No one? Did anybody take it? We've all been watching it for a good month and a half. This is exactly what we were waiting for. No? Oh, it's unfortunate. Was it all the commotion in the market that's frightened everybody a little bit? Because this can happen. It's a shame because it was a really, really good movement that we just were not able to capitalize on. Okay, so look, fair enough. At least we watched it. Okay, so every time that we watch a pattern, we learn something from it. All right, and if anything, I believe that we all got the opportunity to learn and understand the principle of how sometimes we have to adjust this line to get our patterns correct. All right, and we were in a dilemma whether we were going to try and hold it up here or whether we were going to try and hold it down here. All right, so in the end, the last bit was we took out that level, so basically we were ready to go for it. Okay, not to worry, there's always going to be another one. Right now with gold, I can't do anything. I just got to wait it out. All right, so I've got to wait for this pattern to finish up. The only thing that I might be interested in is, give me one moment, but we're not ready yet anyway. Oh, sorry, I've drawn it in the wrong spot. The only other thing that I will be looking for is if I draw parallel lines as I'm showing you right now, is what's going to happen up there. There might be a turning point. I'll be interested in that. But other than that, with gold, I'm just going to have to leave it as it is, as I'm not 100% sure, as we're already in a trade, sorry, with that converging triangle. So just keep it as it is. Okay, so we'll just stay with that and let's see how far it pans out. All right, we'll move on. US yen. US yen. We've got a, at the moment, the consensus is that the US yen is very good value for money. Many analysts believe that the euro yen could be heading towards the 130 mark by the end of the year. It's offering good value for money. What I'm really interested in finding out right now is if this particular candle finishes something like this tomorrow, I will get a fractal over there, and say we open over here, we would have an inside candle, which would mean that at that point there I'd be interested in a trade in that direction. That's one option. Okay, the other option that I have for this particular one is if the current candle breaks this low, gets lower, then what I need to look for is whether this level, this line here, holds. Okay, if that level holds, then I'm naturally looking for the next candle over here, and then I'm looking for the next day as a inside trading inside candles again over there with a fractal on this one. And lastly, the third option that may happen is if this one just breaks straight through like that, then I would start to consider to go short. Okay, if from this point onwards this bottom area does not get threatened, all right, then naturally over here is the next area where I start to look for this way and bounce back in to see if this triangle holds. I do like the long here for a long-term hold, so trying to buy in at some low point if you're planning on holding this one for a while would not be the worst decision that you could think of. Okay, so for right now, I'm waiting to see what happens over the next 2 to 3 candles to see if I can get the scenario that I just described. Okay, that's US yen for this week. Let's move it to Euro yen. Euro yen, again, be careful. Euro is very, very volatile at the moment, as we've already spoken in quite some depth. Basically, what I can see right now is we're coming up to an area of a double bottom. So what I'm going to be looking for is I'm going to be looking for some price action support with a reversal pattern to show me a direction that way. Alternatively, I'm looking for a candle that just breaks straight through and then really opens the door downwards. If the quantitative easy program gets implemented and that number is very, very big, as we spoke of, this one here could shoot right down in a big way. Okay, so keep an eye. This is a key level. We are coming up towards the double bottom. I need to see what happens there before we can make a decision. I will send out the trade via Twitter if I see it as it happens live. All right, I'll move on. Kiwi dollar. Kiwi dollar. We drew this line across the top. I think I can get rid of it now because it's not holding anymore. So let's get rid of it. What we can see with the Kiwi dollar right now is that we are definitely in a consolidating state. We're trading inside the range. So we're looking for breaks out of that area. They're the options one, or sometimes you want to trade inside the range as well. So since we're on the inside, let's have a quick look. Let's see if I can find us a trade. There was one that I saw before. Let me zoom in. Let me get rid of this so that it doesn't confuse me so much. And I'll zoom in. Okay. So if I'm inside the range, what I can see here is I can see two inside candles with a fractal right there. So naturally, I'll be looking to trade the inside bar. But what may happen is I could get another bar inside there as well. And then tomorrow's bar, we would be ready to trade it from that level. All right. So if you're an aggressive trader, you can place your pending order right now to sell right there. Or you can wait for this candle to finish, and tomorrow you might get an opportunity to place it at some higher level. All right, so those are the two. And if you have basically, if I put back that consolidation zone, you would see that those trades are right in the middle of the region. So if you like to trade on the inside, there's a trade right there right now. Alternatively, don't do anything and wait till you get to the top sides before we look for a trade. Okay, so that's what I can see on the Kiwi dollar at the moment. Last one, Euro Aussie. Euro Aussie just shot straight through that support level that we highlighted last week. It didn't hesitate, it just went straight through. The only thing that I can see right now is if I draw my fib line from point A to point B and then extend all the way to the 127 level, I just want to see what happens here. Can I find the trade over there? I'm not going to place a pending order because this is not a round number. But what I will do is, as we approach that, I'm going to look for a reversal price action pattern to see if it supports the idea of a trade bounce. If it does not, keep an eye on this level here. You're going to have to wait for this level and do the same thing all over again before we can find our next trade. At the moment, the euro is really one that just stay away from it. Definitely stay away from the Swissy. Okay, just for this week, everything will start to settle in. Just remember, I believe we might have some good trading opportunities off this quantitative easing decision. We just have to be alert and get ready as quickly as we can to place those trades. Okay, apologies that we've dropped out. Next week I'm going to use a different program. I've tried to really persevere with this one. I'm just having some issues. I do have a full paid account and I'm still dropping out. So look, next week I'll use a different program. Okay, this recording will be posted very, very shortly and I'll email it to you as well. Have a great week. I'll see you all on Thursday at 3:30. Bye for now.